Morning, guys. It's Tuesday, June 17th, 5:24 a.m. Central Time. Grain markets are mixed this morning. Pretty quiet overnight trade. July corn futures down a quarter cent at 4.34 and a half. July soybeans up a half cent at 10.70 and a quarter. July Chicago wheat up 2 3/4 at 5.39 and a quarter. July Kansas City wheat up 1 3/4 at 5.37 and 3/4. July spring wheat is down 3 cents at 6.19 and 3/4. We've got some heat coming into the Corn Belt. Why don't we start there?
Temperatures are slated to run well above normal throughout most of the U.S. Corn Belt this week. Based on GFS model data, our friends at CropProphet estimate that U.S. corn areas will run 6.4 degrees above normal on average over the next 7 days. Warmer temperatures are slated to persist during the 8 to 14 day period. Highs in the 90s are possible across the region by Sunday. Still, rainfall is slated to run above normal during both the nearby and extended periods.
To go back to the temperatures, it looks like maybe Sunday, then Monday, Tuesday next week is when you'll see maybe the most, I'll call it severe heat, some stuff in the low 90s across the Corn Belt. As it relates to temperatures, however, I'll bring this map up. Some areas of the country are behind with regard to growing degree days, especially North Dakota, South Dakota, southern Minnesota, Kansas, parts of Missouri, parts of Illinois. So I suppose, clearly the market views the weather as being non-threatening, mainly because of the rainfall forecast. 104% of normal rainfall expected based on GFS data over the next 7 days for U.S. corn areas, and 155% of normal rainfall expected during the 8 to 14 day period. Just to look at the plain old rainfall maps, where's the rain supposed to happen? Kind of mixed depending on if you're looking at the Euro or the GFS over the next 5 days, but you're going to see some active weather patterns. And then you look at the 10-day forecast, that 5 to 10 involves pretty broad-based rainfall across the Corn Belt. There are some differences between the Euro and the GFS. If you guys are watching, the Euro's on the left, and you can see there's kind of a drier band through Missouri, through parts of Illinois and Indiana and Ohio. That band does not exist on the GFS, which is a little bit wetter. But you're kind of splitting hairs here. There's no weather threat. You look at the corn market, it doesn't feel like the month of June looking at the action in the corn market. It just feels like we're kind of in a back and forth choppy type trade. Doesn't feel like a weather market to me, but it just we've seen no big shift in the forecast. We've seen no threat. This heat appears to be non-concerning for the trade at this point. Could you run into a issue where there's too much rain at some point in time? Yeah, but the market's not going to react to that right now.
Soybean oil climbed to a 20-month high on Monday. The July 25 contract rose to its expanded daily trading limit following a limit up close on Friday. The contract gained 4.5 cents to settle at 55.1 cents per pound, driven by the EPA's announcement of higher than expected U.S. biofuel blending targets. Meanwhile, the July 25 soybean contract briefly jumped to a 1-month high before retreating to end the session unchanged, closing near 10.70 per bushel. Corn futures weakened amid favorable weather forecasts, with the July 25 contract falling approximately 10 cents to settle near 4.35 per bushel.
Okay, so we know that soybean oil futures have rallied sharply. Let's look at the other piece and the bigger piece of the product market, which is soybean meal, which has collapsed. I'm just going to read you guys what I wrote in our email this morning. Soybean meal futures have collapsed following Friday's EPA news. Traders clearly believe that U.S. processors will crush even more soybeans in order to meet biofuel demand for bean oil. A 60-pound bushel of soybeans, when crushed, yields about 47 pounds of meal and only 11 pounds of oil. Some traders seem to believe that this is a bearish item for corn, given that meal could compete in feed rations. Others have argued that meal feeding in the U.S. is probably already at maximum levels, given pricing relationships versus corn. It's already kind of cheap. So is this a roundabout bearish item for corn and for DDG demand? Yeah, maybe it is, that meal's getting awfully cheap. If you go back and you pull up the monthly on a continuation basis, the meal market is kind of hovering just above pre-COVID lows, which is a very bad place to be for any commodity. You would think that things would have adjusted for inflation, and some things have and some things haven't. And as it turns out, that the trade is very much convinced at this point that we're going to have to crush more beans to meet this biofuel demand as it relates to soybean oil, but there's going to be a glut of meal as a result. And I think we're going to have to export it because we're probably at about maximum usage already because we've been cheap for a while.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Pete Meyer was on yesterday, and we kind of went into the weeds on this EPA news. Is it really a win for U.S. farmers? And if so, when? We also talked about last week's debacle with ADM and cash soybeans. I got a lot of text messages. Joe, this is insider trading. Did you see what ADM did before this EPA announcement? I don't know. Pete gave us his thoughts, which I thought were very interesting. Pete is also doing Sunday weather updates for us every Sunday from now through second or third week in July. Pete will talk weather at 6 p.m. Central Time on Sunday evening. Basically give you an idea. Hey, this is what the forecast says, and this is what it means for the market. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. It's information only. We won't try to sell you anything else. We don't want to do your brokerage or crop insurance or anything like that. We don't really want to talk to you ever. We do have a text message service in which we will reply to you directly with questions or observations or whatever. But we just want to send you our info for $50 a month. Cash grain marketing recommendations, morning email every day is 5 a.m. Central Time. New premium video every single business day. Support independent media guys. We don't have sponsors. There's nobody that owns us. We don't have any corporate backing. Premium subs make everything that we do possible. YouTube and the podcast, the free stuff you guys watch. This is a monster loser for us. The premium subs pay the bills. So give that deal a shot this morning, guys.
U.S. corn crop conditions improved for the third consecutive week last week. The crop was rated 72% good to excellent nationally as of Sunday, compared to 71% the prior week and 67% on average. Significant weekly rating improvements were seen in North Dakota, Nebraska, and North Carolina. In contrast, Texas saw the largest decline in good to excellent ratings, followed by Pennsylvania and Wisconsin. The U.S. soybean crop was rated 66% good to excellent nationally, compared to 68% the previous week and 65% on average. The weekly national decline was driven by significant rating drops in Michigan, Louisiana, and Wisconsin. Conversely, North Carolina, Tennessee, and South Dakota posted notable week-over-week improvements.
And the markets go wild. July corn futures and July soybean futures are trading absolutely unchanged as we speak here this morning. So that's a damn good corn rating, and it's not going to get anybody excited. Nobody's going to run to cover their short positions in the corn market. Nobody's going to run to buy corn with the crop rate at 72% good to excellent nationally. I'm not saying the crop ratings are an end-all be-all by any stretch of the imagination. I know that they are deeply, deeply flawed, but this is just not going to get anybody excited. Same thing with soybeans. I know we backed off a little bit, but that's still a pretty good rating. Let's go to wheat.
So U.S. winter wheat ratings declined last week. As of Sunday, the crop was rated 52% good to excellent nationally versus 54% last week and 44% on average. The rating fell below analyst expectations of 54%, but was the best for the week since 2020. The crop was 10% harvested nationally as of Sunday, up from 4% the previous week. U.S. spring wheat conditions improved for the third consecutive week, with the good to excellent rating rising to 57% nationwide compared to 53% the prior week. Over the last 3 weeks, the good to excellent rating has advanced 12 percentage points. The rating exceeded analyst expectations of 54% and was slightly above the 5-year average of 56%.
One thing I would note here is that winter wheat harvest is delayed. There's some rain on the radar this morning over the southern plains, Kansas, and elsewhere. Kansas wheat crop was only 3% harvested on Sunday, as of Sunday, versus 11 on average. Oklahoma was 30% harvested versus 46 on average. So there are some delays and possibly some disease pressure because of the rainfall that they've seen in the southern plains. I know the market doesn't seem overly excited about that, but it's something to be aware of.
U.S. corn shipments were near the upper end of pre-report expectations last week. USDA reported that 66 million bushels of corn were inspected for export during the week ending June 12th. The print was down 3.2% compared to the previous week, but up 21% versus the same week last year. Soybean shipments were near the lower end of expectations at 8 million bushels. The print was down 61% compared to the prior week and down 37% versus the same week last year. Wheat shipments were reported at 14 million bushels. The print was up 20% from the previous week, but down 5.5% versus the same week last year.
USDA is probably going to have to come up with its corn export projection again. That's an excellent week of shipments, and it continues. It's mid-June. I mean, I don't know. What do they come up? 50 million bushels. It might have to be another 50 or even 75 million before it's over, which turns the whole situation into an even bigger head scratcher. Like, this old crop situation is pretty tight. Even the new crop projections, as flawed as I'm sure they are not overly bearish when you're relative to current price levels for new crop corn. So I don't know. I mean, I don't have anything bad to say about corn. Soybean shipments are not supposed to be strong this time of year. Wheat, okay.
The National Oilseed Processors Association released May crush data on Monday. The U.S. soybean crush increased 1.4% from the prior month and 5% year over year as NOPA members processed 192.8 million bushels in May. The crush was the largest for the month and the eighth largest for any month on record. However, last month's crush did fall short of the average trade estimate of 193.5 million bushels. End of month soybean oil stocks in May declined to 1.4 billion pounds, down 10% from the end of April and down 20% from a year earlier. Stocks were the lowest for the month since 2004 and also fell below the average trade estimate of 1.5 billion pounds.
Assuming that last week's EPA proposal comes to fruition, there is a comment period, and then it'll be finalized, I believe, by the end of October. Should be just to the moon with crush volume. We should continue to see records printed on a monthly basis for the most part. With regard to soybean oil, all exports should stop. Everything that we produce should be used domestically for biofuel, the way that it would appear, again, if the proposals come to fruition. So this is going to be a big time bright spot. USDA has already got a record crush number penciled in for new crop, but they could be a little bit too low.
Improved harvest prospects led to a decline in Russian wheat export prices last week. Sovacon reflected the more optimistic outlook by raising its new crop wheat forecast by 1.8 million metric tons to 82.8 million metric tons. However, several parts of the Rostov region, one of Russia's main grain producing areas, have declared an agricultural emergency due to ongoing drought conditions. Meanwhile, Russia's deputy prime minister estimated 2025 total grain production at 135 million metric tons, up from 130 million metric tons last year. Additionally, 93% of winter crops were reported to be in normal condition.
Russia, again, projected to be the world's top exporter of wheat, accounting for 21% of all global exports, according to USDA projections. I believe their export market has been softish as of late because of these improved crop prospects. So that's why the wheat market has struggled to some degree. It's just been unable to really post any sort of substantial rally.
President Trump on Monday called for the evacuation of Tehran amid escalating tensions in the region. Earlier in the day, he claimed that Iran was interested in reaching a deal, although he didn't provide any further details. Meanwhile, the Wall Street Journal reported that Iran had expressed willingness to resume nuclear negotiations with the U.S. on the condition that Washington does not get involved with Israel's attacks. Analysts warned the situation could spiral into a broader regional war that could potentially disrupt global oil markets and trade flows.
Crude oil has been your barometer for this whole situation. It's actually fairly quiet this morning. The July WTI is up $1.17, 72.94 last trade there. It's not a huge rally. We're still well removed from the highs that were posted Sunday night or into Monday. So for the moment, things kind of paused. But yeah, still a lot of tensions. What did cattle do yesterday?
Cattle futures rebounded. Live cattle were $1.92 to $3.10 higher. Feeders saw gains ranging from $2.50 up to $4.02. Box beef was also higher. Choice was up $4.23 at $3.82.11, and Select was up $3.97 at $3.67.48.
The Dow Jones is down 240. The S&P is down 36. Treasuries are up just a little bit. U.S. dollar is up a little bit. Crude oil, as I mentioned, up $1.17 in the July WTI, 72.94 last trade. Have a great day, guys. We'll be back on Wednesday.